35 billion US dollars. So if you have been able to stop 50 billion US, they did it in beats, of 10 billion each month. People are beginning to talk about when it's going to end. Everybody expects that they should stop it altogether before the end of this year. The good news in that is that these injections had been required to stabilize the global financial system. The fact that they have successfully cut down more than half of it, and global markets are still growing because if you look at the World Equity Index, the Morgan Stanley World Equity Index, it's also reached a new peak. It has exceeded, the pre-crisis peak, in spite of the reduction in the asset repurchases by the Federal Reserve Bank. So it says to you that the global liquidity situation has become strong enough for the U.S. to stop the injections. That's good news. What is hoped is that strength of global liquidity will persist, because you need a stable global liquidity environment for the Nigerian financial environment to be stable. You now have reduced pressure on the foreign exchange market. That's why reserves has picked up. So if you have continued stability on the global scene, you will soon see Nigeria's reserves maybe approach the previous peak that we saw of 60 billion US dollars. You might see some appreciation of the naira, and of course interest rates will come down significantly, and inflation will come down. So it's good news. I don't see anything negative because the American policymakers who had taken the initiative to do the quantitative easing when the global liquidity was weak, they don't intend to rock the global liquidity situation, but they find signs of strength in the global economic and financial situation. That's why they're stopping the
now, is it possible to have a low interest rate and also a low inflation rate?
Well, it's not a question of is it possible. We have experienced it in the past. In 2004 to 2008, interest rate dropped from 15%, that's the treasury bill rate, to 5%, the Soludo era. Inflation dropped. Naira appreciated. So in an environment of appreciating currency, inflation will weaken. If you drive it hard enough, prices will actually fall if you have appreciation of the currency. And interest rates will also decline. And that's where we're in that zone now. And the global situation is presenting us very much with the same kind of situation that we saw in 2004 to 2007. So I expect that soon you will see the naira appreciate. It's been stable in the past 3 years or so. Soon you will see interest rates fall significantly. And soon inflation has already been falling. It will continue. It will most likely continue to fall.
Well, when we talk about a fall in inflation, perhaps it can be described as being marginal. I do not know if the MPC really looked at the level of inflation rate in this decision. Do you think it did to retain the MPR at 12%?
Well, inflation has moved from 7.9 to, I think, 8.0 the last month, 8.2. We are talking of 0.1, increase. That's not, anything you would worry about. Because what matters really is the persistent component of inflation, not could be up today, down tomorrow. That policy shouldn't, be worried about, slight fluctuations in the inflation rate. I do not think there's any reason to worry about inflation at this moment.
Now, despite the challenges facing the global economy, attention has actually shifted to emerging and developing economies like Nigeria. What are those factors that are driving growth in these economies?
Well, the story varies, from country to country. And emerging markets are doing better than the developed markets. The worry for the emerging markets is about how they might cope with the fluctuations in the level of global liquidity. Weaker economies or economies with weaker policies have been more vulnerable. Quite a number of developing countries had seen a bigger movement in the exchange rate than Nigeria has managed to have a stable exchange rate, but some other countries in Africa had not been that lucky. South Africa, Ghana, Kenya had not been that lucky because they had slightly weaker fundamentals than Nigeria.
Now, in the first quarter of this year, real GDP growth, according to the communique by the MPC, was 6.21%. Now, the committee acknowledged the growth during the first quarter of the year. Now, despite this growth, the MPC didn't consider it as a good enough reason to ease a stance on the interest rate, because a lot of people are of the view that perhaps the MPC should begin to ease its hold on interest rate. What's your view about this?
My view is that I'm very strongly in support of an easier monetary policy stance. I also appreciate the fact that the new governor has to tread cautiously. Whatever he wants to do, he doesn't have to rush into it. This is his first meeting. And it might be a good thing to try and see some persistence in the trends that I imagine before policy decisions are taken. So if over the next one or two meetings, the same pattern persists, growth figures continue to be strong, the financial markets continue to be strong and stable, it could ease. I do not think that it should rush into it. One of the errors of the post-September 2010 tightening regime, tight monetary policy, one of the errors was that I believe they rushed into too many things. They were hasty in taking action. When patterns emerge, I think that in itself could destabilize the economy. Whatever you want to do very, very carefully, very cautiously, very slowly, so that before you act, you don't act based on, oh, I feel, or I think. You ascertain, that developments that need to be corrected have occurred, then you act.
Okay. Now, the committee noticed that there is an improvement in the macroeconomy, relatively stable interest rate. We also have stable consumer prices. Now, what do you think would have contributed to this stability that we recorded in the first quarter and even part of the second quarter of the year?
Well, the forces that tend to destabilize the Nigerian macroeconomic environment are largely global. You need a stable global environment for you to be able to have a stable domestic environment. And one of the biggest problems that Nigeria had to grapple with over the past 3 years has been excess demand on the foreign exchange market, which thankfully has abated. In March, the central bank had to sell $3.5 billion on the wholesale Dutch auction market. That's falling to about $1.5 billion by June. And that's good news. So if you have that stability over the next 3 months, 6 months, I do think the horizon might be clear for the central bank to ease monetary policy.
Now, the cash reserve requirement was retained. Cash reserve requirement on public sector deposits was retained at 75%. Now, if you look at the background of concerns about the need for banks to have more liquidity to trade with or to do business with, do you think that this decision by the MPC is apt at this time?
As I said, whatever they want to do, given that a new governor just took over, they should do with a bit, deal cautiously with a bit of patience. There are other ways that the central bank can provide, liquidity support to the banking